Assalamualaikum. This week we're going to continue on how to construct a statement of cash flow. So let's have a look at the slide. So this slide, some of these slides actually has been shared with you in the previous week. Okay, so statement of cash flow, there are three core activities, okay, that would be recorded under the cash flow. That is a cash flow from financing, CFF, cash flow from investing, and cash flow from operation, CFO. Okay, so statement of cash flow. So we know that statement of cash flow is divided into three sections, as I mentioned before. Cash flow from financing, okay, which is include cash received from inflow. Okay, like we issue the debt and equity. So when we issue the debt and equity, there are actually cash inflow. Okay, when people or the investor buy the debt or buy the equity from us, so there is an inflow to the business. So as expected, CFF is reduced by dividends paid. Okay, when we pay the dividend to our shareholders, so there must be an outflow because the cash go to the shareholders, so cash outflow. And then cash flow from investing is usually negative because the biggest portion is the expenditure outflow for the purchase of long-term assets such as plants or machinery. Okay, so we call it as a cash flow from investing because we are investing, okay, to buy the assets, okay, for the operation of the company. So when we buy the machine or the plant, all right, so the cash outflow, okay, but then the expenses too is not called as expenses, but it is called as investing because we invest in that machine, okay, to produce more return or more sales, okay, from the investment. Okay, next, cash flow from operations, okay, naturally includes cash collected for sales. Okay, when we have sales, so we collect cash, okay, there's inflow. And then cash spent to generate sale, this include operating expenses, okay, such as we paid salaries, rent and taxes. But notice two additional items that reduce CFO, okay, when we paid for inventory and interest paid on debt. Alright, so the CFF plus CFI plus CFO, okay, will become our net cash flow. Okay, a statement of cash flow focus on the following cash related activities. So this is just to repeat again what I have mentioned earlier. So the operating cash flow, cash generated from day-to-day business operation, and then cash from investing, use for investing in asset when we buy assets, as well as the proceed from the sale. So when we sell the assets, so we got proceed, and then that is considered as cash inflow from investing. And then the cash from financing, cash paid or received from the issuing or borrowing of fund. Okay, next. So this is a statement of cash flow classification. So you can see here. Alright, when we sell equity, okay, so this is a cash inflow, okay, and then when you issue debt, okay, the investor buy the debt or the bond, okay, we receive cash inflow, okay, the things, the item in the bracket like this, like when we pay dividend, so this one is considered as outflow, okay. And then this one is, these three is for the cash from financing. And cash from investing, when we buy asset, so this is an outflow. Okay, so this one is outflow. And then cash flow from operating, make sales, inflow. Okay, when we buy inventory, we pay costs, we pay taxes, and we pay interest. So all of them are considered as outflows. Alright, next cash flow analysis. Okay, so this cash flow analysis primarily used as a tool to evaluate sources and uses. Okay, to evaluate sources and uses of funds, okay, of the company. So sources is the cash inflows, and then uses is cash outflows. Alright, so it provides insight on how a company obtain funds. Okay, so that's for sources during a particular period. Okay, and then analyzing cash flow helps Okay, we assess the liquidity, the solvency, and the financial flexibility of the company. Alright, so this is the sources and uses of funds. Okay, so sources of funds. Okay, funds may come from the operations or trading profits. Okay, so this one is revenue of the company lah, or the sale. And then when we issue share capital, we issue equity. Okay, we issue debentures, or we raise loans from bank. Okay, and then maybe come from the sale of fixed or non-current asset or the long-term investment. Okay, may also come from the non-trading receipts, such as we receive dividends, and then it also will be a source of fund of the company when we decrease in working capital. Okay, next let's have a look at the uses of funds. Okay, so uses of funds. Okay, duit tu pergi ke mana? Funds lost in operation. When we lost in operation, and then we do redemption of the preference share capital, and then we repayment of the long-term loans and redemption of debentures. Okay, and then the cash outflow when we purchase of the non-current asset or fixed asset, and then we have to pay for the dividend and tax. Okay, and then we have to pay the non-trading payment, and also the uses of fund when we increase in the working capital. Okay, so the statement of cash flow reporting by activities. So as we know, operating activities. Okay, so the cash flow from operating activities, cash flow from investing activities, and the cash flow from financing activities. Now let's have a look at what are the items to be recorded under cash flow from operating activities. Okay, so cash flow related to the provision of goods and services, usually related to the current asset and the current liabilities. So example, okay, cash received from customers, cash payment to suppliers and employees, and then interest paid, interest received, income tax paid, and dividend received. So all of these items, okay, are recorded under cash flow from operating activities. Okay, next let's have a look at the cash flow from investing activities. So what are the items to be recorded under investing activities? Okay, so cash flow related to the sale and acquisition of the non-current assets and investment. Okay, they are not cash equivalent, such as purchases or sales of property and equipment, purchases or sale of a equity investment, and then purchases of sale of a business. Okay, next, right, so let's have a look at the cash flow from financing activities. So cash flow related to the changing the size or composition of financial structure, right? So the example are changing level of debt or equity. Okay, if there are any borrowing or repayment of debt, and then if there is any issuing or redemption of shares, and when we paid the dividend. So this item to be recorded under cash flow from financing activities. Okay, so these are the steps in constructing the statement, but I'm going to show you the step by step in the next video how to prepare the cash flow. Alright. So the net cash flow from operating, there are two methods, indirect and direct method, but both methods yield identical result. Meaning to say here, whether you are using the indirect or direct method, we are going to get the same results. Okay, so this is the net cash flow from operating. You are going to start with the net income, you plus with the depreciation. Okay, because the depreciation is a non-cash expense. Okay, non-cash expenses. And then you plus any gains, so you minus any losses on the sales of the asset, and then you plus cash generated, or you minus any cash used by the current asset and liabilities, and then you will get the net cash flow from operating activities, CFFO. So to construct the CFFO, you have to bear in mind any increase in asset is considered outflows. Alright, any increase in liabilities we considered inflows. Okay, any decrease in asset we considered inflows. Any decrease in liabilities we considered outflows. Okay, so this is a net cash flow from operating activities. Alright, kenapa kita add back depreciation, add back? So because the net income, kan you start from the net income, but the net income ni come from the sales, you minus expenses, you minus depreciation, right? But the depreciation ni is a non-cash, okay, non-cash expenses, so that's why you have to add back the depreciation expense here, okay. And then baru you proceed with the gain or losses of sale asset, and then you plus or minus the cash generated, and then you will get the CFFO. Ini sama je dengan yang kat atas ni, just to show you kenapa you tambah balik the depreciation, why you add back the depreciation, okay, because the net income tu dapatnya daripada you tolak depreciation kan. Okay, and then next is the net cash flow from investing. Ini biasa saja, maksudnya any any increase in the financial investment you are going to you're going to plus or minus any financial investment, and then you are going to plus or minus any capital expenditure, okay, involving buying or disposal of the non-current asset. So if you are buying the non-current asset, so there is an outflow, okay. When you dispose the non-current asset, there is an inflow. Ini dapat duit lah when you jual, okay. When you buy, minus sebab duit keluar. So you will get the net cash flow from the investing activities, CFFI. And then the last one, the net cash flow from financing, when you issue debt. Issue dapat duit lah kan, cash. So when the debt is retired, you have to pay back. So you will get you will record the cash outflow. When you issue equity, there is inflow, okay. But when the equity is retired, you have to pay back, okay, minus, because there is an outflow. And when you have to pay the dividend, okay, so there is an outflow, okay. So you will get the net cash flow from financing activities. So to help you have a better understanding, alright, let's do the past year questions together, okay, in the next video. Thank you.